Welcome back, everybody. It's time for today's Tech Check. And Uber is reportedly looking to spin off one of its businesses, although the stock's lower. It's given up its gains from early. The whole point of the spinoff is to get your stock up. Let's get out to Deirdre Bosa for the latest on this one. Hi, Deirdre.
Well, the talks may be extremely early, and the other point, they may not actually get that much for it. But let me give you the background. Uber potentially looking at divesting its freight business to streamline the business, its core business, and boost margins, something that has really been a cornerstone of CEO Dara Khosrowshahi's leadership at the gig company. For consideration, a spinoff or sale, as Kelly said. Uber Freight was created way back in 2017, and it was bolstered by an acquisition in 2021. Separate from Uber's core of connecting drivers with passengers, this unit is all about logistics, connecting truckers with shippers, acting as a middleman in the long-haul trucking sector, which, as we know, has been under pressure over the last few years. So now Uber may be looking to monetize that investment as it refocuses on its core businesses of ride-hailing and food delivery. If it does happen, and again, I hear that this is a long shot in the current environment, it really tells the story of tech over the last few years. Back in 2017, Uber was synonymous with disruption, selling its vision of being the future of moving things and people, cars, yes, but also food, bicycles, trucks, helicopters, even self-driving cars. Now, however, investors, they want cash flow, margins, cost cuts, not those moonshots. And CEO Dara Khosrowshahi, he's a lot more tuned into that Wall Street sentiment than former CEO and founder Travis Kalanick. He was all about disruption and moonshots. Khosrowshahi was actually one of the first leaders within tech to see this shift coming, talking cost cuts, slashing spending a year ago, months before other CEOs found their religion. He said at the time, the market is experiencing a seismic shift and we need to act accordingly. That was in a letter to employees that I got a hold of nearly a year ago now. That said, Uber is still deeply, deeply unprofitable on a GAAP basis. Selling or spinning off Freight, Kelly, that would help pay down some nearly $12 billion in debt, and it would stem losses that Freight is contributing to the bottom line, because even on that unit economics, that adjusted EBITDA basis, that unit is still losing money.
And I mean, obviously, if you run Uber, you're looking around at Zuckerberg's year of efficiency, what Musk is doing, what sale, and you're getting the memo here. So the market that Deirdre implies they want them to go further. Does that mean raising prices, or are they just going to try to wait it out for a softer labor market? Because I know he recently made some comments about how, they are seeing more drivers come into their labor force. And I think he said it was maybe inflation driven. But yeah, if that helps, kind of bring their costs down.
In terms of that supply and getting drivers back onto the app, Uber's had success. They saw that coming versus, say, a Lyft, which was kind of shocking last quarter, which some called the worst earnings call they'd ever heard of. It really caught them by surprise. So Uber has already sort of achieved this better efficiency, at least as you can see it in those unit economics. But quite frankly, Kelly, there's not a whole lot left to spin off. Remember, it kind of spun off its self-driving car units, spun off scooters and e-bikes. So Freight is one of those things that is left. But I'm looking at a note here from the street, Bank of America. They think it could sell at 1 times 2024 estimated revenue, implying a segment value of less than $8 billion. They've already taken investment in this unit, so it's unsure how much they would get for it, especially in this market environment, especially with the trucking backdrop.
Deirdre Bosa, thank you. Always finger on the pulse. We appreciate it very much.